Man, hats off to Adam Aron, the CEO of AMC. Last night in his interview with Trey, he told us all exactly what we wanted to hear. I mean, you wouldn't want anybody else representing your company as CEO because he did such an amazing job making everybody believe that he is the best leader out there for AMC, that he brought us through the pandemic, and he's going to take that company to infinity and beyond. I mean, my gosh, guys, for a minute there, I thought I was watching a marching band with how many horns this guy was tooting. And look, okay, if you like watching videos where you're told what you want to hear, you've already watched that video. But if you like watching videos where you're told what you need to hear, and you need a different perspective on things to kind of challenge the traditional way of thinking, stay tuned for the rest of this video because that's exactly what we're going to do here. We're going to break down this interview, what was really said, and how I still, guys, I'm not convinced that allowing AMC to issue these 500 million shares is a good idea. Now, if this sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. If you haven't subscribed to the channel yet, make sure to click that subscribe button, join the channel, and become a bro. We're here every single day, and we're growing our portfolios together. Look, I know it is not popular to come up against and to challenge traditional thought, especially when that traditional thought is exactly what you want to hear. Now, guys, last night in this interview, we were told so many good things about the future of AMC and about the future value of shareholder wealth and so on and so on. But let's break down what exactly we heard here, because at the end of the day, here's what we watched. We watched a leader pitch a position on an upcoming vote. The CEO of AMC knows that retail investors are the majority stakeholders in AMC right now. And he knows that Trey has an immense audience of loyal followers who absolutely are invested in AMC. So what better place to go and to pitch his idea and say how great it would be if they vote yes. Now, that's all we watched last night was a pitch for a yes vote. And man, did he tell us everything that we want to hear. Okay, now let's just look at this, all right? He came out and he said that if you vote yes for the possibility of issuing 500 million new shares, AMC promises not to issue any of those new shares in calendar year 2021. Now, this says one of two things to me. One, the first being, he does not believe that AMC will squeeze in 2021. He does not believe that AMC will squeeze in 2021. And now, why do I think this? He avoided the conversation surrounding the squeeze at all costs. Trey did an excellent job asking some questions, right? Now, we know that the CEO has all of these responsibilities to the press of the company and treated this as a press release and so on and so forth. Excellent job by Adam of dodging all of these questions, right? Trey first asked him about the short squeeze, and he said, well, you know, I don't like to get into the weeds of things. Completely dodged it, okay? All right, what's Trey going to do, right? Good interview, move on with the questions, keep things going. He brought it back up towards the end and asked what he thought about all the hedge funds shorting the stock and so on and so forth. And Adam, once again, did a great job of dodging the question. He said, well, you know, as CEO, I didn't get to become CEO of AMC by worrying about the technical side of trading and the trading aspects of the stock itself. I got to become CEO of AMC because I'm worried about the fundamental value of the company and the long-term performance for shareholders' wealth. Excellent answer on avoiding the question when it comes to the short interest that's out on AMC right now and a possible short squeeze, right? Great job. I mean, I don't think I could have done any better than that. I don't think anybody could have done a better job in avoiding the questions that were being asked when it comes to the short squeeze. So one, I don't believe that the CEO or AMC executives believe that a short squeeze is going to happen in 2021. Now, if they do think there's a chance, listen, guys, they didn't come on there last night and just throw this out there. They had all of their analysts weighing the options here, thinking, oh, what do these kids need to hear? What do these people need to hear in order to vote yes? Because if they vote yes, we're essentially bankrolling that company for the next 10 to 15 years, and they know it. So they need to get that yes vote. So they came up with a good idea. Well, these retail investors, they're short-term investors, right? They want to see a short squeeze happen, and they want to see a short squeeze happen fast. Well, here's what I need to tell you guys. Short squeezes, they don't happen overnight. A lot of things need to come into play, and hedge funds have a lot of money before they finally get margin called. So it could take a long time for a short squeeze to come to fruition, and they know that. So they said, all right, well, let's just say 2021. We'll leave it off the table for 2021. By the time everything gets authorized and moving forward, companies don't act that quickly, especially when they're multi-billion-dollar companies. They don't make quick decisions, okay? So they probably didn't expect to issue any of these shares in 2021 to begin with, but it sounds great when your upcoming, vote needs to be voted in and needs to be voted with a yes. I mean, if institutional shareholders were the majority stakeholders in AMC right now, they wouldn't want to be diluted. But it's a different game because retail investors are the majority stakeholders in AMC. Now, he did an excellent job of explaining all of the benefits that could come from voting yes. Okay, let's talk about it. I think he covered 4 of them, right? Number 1, AMC has roughly $450 million in deferred rent. Okay? Now, they could use all of these newly issued shares to pay down deferred rent. They have a lot of debt on their balance sheet. Guys, the debt exceeds assets. Now, when that happens, that essentially means your equity is worthless, right? If you're looking at the book value per share, balance sheets, assets equal debt or liabilities plus equity. Debt is just another term for liabilities. But assets equal liabilities plus equity. So when debt exceeds your assets, that means your equity is in the negative. Okay, so if you look at the book value of AMC, it's technically in the negative. So another thing they want to do is pay down their immense amount of debt, and they want to use additional equity to do so. Okay, another thing that they could potentially do is, well, what happens if we get another lockdown or governments start to quarantine people again and AMC's forced to shut down operations once again and move forward? How would they survive without being able to issue additional equity? Let's tap the shareholders again. Let's tap them again, right? They need to bankroll us if the pandemic comes. Now, the last and final thing could be one of the best instances to use these additional shares for, okay? The last thing that he said they could use them for is to acquire competition. Now, this would be an excellent thing for the growth of AMC, but they definitely need to focus first on getting leaner as a company. Okay. Now here's what he said in reference to that. He said, oh yeah, we could use these additional shares to acquire companies. I mean, think about it. If we're trading at 7 times EBITDA and our competitors are trading at 4 times EBITDA, it would make sense to go out and buy our competitors because they're trading more towards the industry average, and we could acquire them at a much cheaper rate. And then because we have so much overhead, we can make them even more efficient by doing away with all their overhead and blah, blah, blah. It makes sense, but it might be hard to understand. So let's break that down real quick. I'm not going to make this video too long, and I know this is sounding like a pretty harsh video at this point, but it's something I feel very passionate about because I believe that businesses should be run to take care of themselves. Not every time you get in a jam can you go out and tap other people for money, right? Use your stimulus check as an example. At some point, you have to take care of yourself. You can't rely on other people to always pay your bills. So let's just look at this really quick. All he's essentially saying there is we know that our stock is trading above its value right now. And we want to take advantage of this by issuing new shares at this inflated price and then going out and buying competitors where they're trading at their analyzed price or at their fundamental value. They're trading where they should be trading. We're trading above where we should be trading. So why don't we take advantage of this inflation in our price and go out and buy our competitors? Now, I know that's a very basic example of what he was saying there, but at its roots, That's exactly what he was saying. So they know that the share price is inflated and they want to take advantage of it. Now, I know there's going to be a lot of people out there that get a little bit upset by saying that the price of AMC at $9 per share is inflated. Guys, it's above the industry average. We have a negative book value right now. The reason that so many people are interested in AMC is because of the short interest and the fact that we could trigger a short squeeze. Okay? Now, he tried to quench all the fears and tried to put out the fear fire around issuing all of these shares and diluting the market. Now, we know that he's not going to go out and issue all 500 million shares. It doesn't take 500 million shares to kill the short squeeze. Honestly, all it takes is people willing to trade the stock. It doesn't matter if it's 1% of the holders willing to trade that stock. The short squeeze can't happen unless people are willing to hold this stock and allow these institutions that owe these shares, that are obligated to buy these shares, to continue offering a higher price. You're not going to hear him talk about this because he is completely focused on the fundamental value of the company and the long-term fundamental value of AMC. And it makes perfect sense. That's exactly what he should be focused on as CEO of the company. Okay? If you want a guy running your company, Adam Aron is the man to go. I'm blown away by how good he did at telling everybody exactly what they wanted to hear. Now, knowing that, you need to ask yourself one question before it comes up, because he told you that you can go and re-vote, you can change your vote to a yes, all of these things. You need to ask yourself, let's ask yourself two questions before you're finally okay with the vote. And whether you vote yes or no, that decision is completely up to you. But the first question you need to ask yourself is, are you investing in AMC because you believe in the long-term fundamental growth of the company? If that's the case, you need to know that the price is trading well above its fundamental value right now. Or two, are you investing in AMC because you want to trigger a short squeeze? You want to allow these hedge funds to bleed dry because they shorted this stock in such high amounts. If that's the case, then your price is justified. It's a speculative trade. We know it's a speculative trade, and you're really trading this stock on a technical basis, not on a fundamental basis, and you believe that we could trigger a short squeeze. And if that's the case, guys, it's gotta be a no vote, because yes, they're gonna take advantage. They will take advantage of issuing shares when they believe that the share price is overvalued. It's just inevitable that they're going to do that. Is it in the best interest of AMC to have these access to these shares? Probably. And here's what I'm going to end it on. If they have access to these shares, they essentially have access at the current market value to a $5 billion bank account. Okay? If we hold on, and if the price goes up to $20 a share, they have access to a $10 billion bank account. If we quadruple the share price and it goes to 40, they have access to a $20 billion bank account. Now, this could bankroll the company for years and years and years to come. All they have to do when they get into a sticky situation is access that equity and move on. Now, Adam Aron has been dubbed the Houdini of CEOs, because not only has he saved AMC and all of the companies in the past, but it seems like an impossible feat, right? Well, here's something. How hard is it when other people pay your bills for you? Because AMC, right now, we talked about the debt to equity ratio. The debt to equity ratio is roughly 128%. That means they have 128% in debt for not debt to equity, debt to asset. For every asset they have $1.28 in debt. Okay? If we want to see a real Houdini, save AMC by running AMC. Allow the revenue that AMC brings in to cover the costs that AMC incurs. You went out and we got all this debt on the table now. Instead of asking new shareholders to come in and pay off that debt, how about AMC pays off that debt? It's a crazy concept to think that a business should do business instead of tapping new equity every time they want to expand or every time they want to get leaner. Guys, it's not something to play with. Businesses are businesses for a reason, okay? They stay in business because they do business, not because they can go out and create a GoFundMe account every time they need a little bit of extra help. So I know this was a pretty harsh video and whatever. Hopefully, too many people didn't get offended, but you need to know the truth in what's going on here. Vote because you know what you're voting for, not because you heard what you wanted to hear. And that's where I'm going to end it, guys. If you like the content on the channel, don't forget to click that like button. If the subscribe button is still red, make sure to subscribe to the channel. Join us, become a bro. We're here every single day, and we're growing our portfolios together. And there's a link in the description below for Webull, man. Set up that account. It is super simple, and if you deposit $100, you're going to get a couple free stocks just for doing so. Share this video. If you're still here, share this video with somebody who needs to know what is happening with AMC and what this vote really means. It's going to be important, and if you do so, make sure to tag me, Claybro or Claybro883, almost anywhere. I would love to follow you guys back and really see what everybody's interested in investing in. Now, until the next time, I hope that each and every one of you have an awesome day.